Morning all, Peter Switzer here with another money market morning update. And let's start in Wall Street now, and Dow down 109 points, S&P was off 1%, Nasdaq was down 1.58%. And you might be asking yourself the question, what happened to the trade truce and the rise you would have expected for stocks? Well, I think that the trade truce was actually a good thing for the market, but the big problem was that Meta and Microsoft, those big tech companies, have reported badly. And on top of that, Jay Powell, the Fed boss, hosing down the expectation of a December rate cut. That didn't help the stock market as well. And I think this take on Donald Trump and investing, and not just Donald Trump, you can always throw in Xi Jinping as well. But this is what Jed Ellerbrook, portfolio manager at Argent Capital, said. He said, this is not all over. The Trump-related trade volatility is going to remain a feature of our capital markets as long as he's president. And that's my assumption. And yesterday's result basically affirms that. So Xi and Donald are a part of the furniture. But despite all this, Scott Wren, who comes from Wells Fargo, said this: investors are hearing a lot of headlines this week, but our suggestion is to look through the noise of the day and focus on the trends in place and those likely to offer attractive returns looking ahead. He continued by saying, we continue to see pullbacks should they occur as buying opportunities, and he's targeting 7,400 or 7,600 on the S&P 500 for next year, and that implies about 10% gain for stocks. I'm kind of with this guy. I think there will be problems with Donald Trump and Xi Jinping and even the Federal Reserve. But given the fact that there are tax cuts and deregulation coming, as well as AI, all that adds up to me being a good reason to like stocks going forward. That's me for today. See you next week. You have a great weekend.